What if I told you the US dollar is falling faster right now than it has since 1973? That's right, the almighty greenback, the backbone of the global economy, has dropped like a rock in just a few months. But here is the thing, this isn't the end of the dollar, not yet, but it could be the beginning of a new chapter, one where volatility, not stability, is the new normal. Let's break it down in plain English, and also I will share what this means for you and your investment. Let's go. Since mid-January 2025, the US dollar measured by the DXY index has taken a serious hit, down more than any first half of the year since 1973. It started around Trump's early year tariff announcement and rising geopolitical noise. Foreign investors, they saw the writing on the wall and reduced their exposure to dollar assets. We are talking about a world that's long been addicted to US dollar, and suddenly the room started spinning. Whoa, time out. Let's pause. If you're wondering what is the DXY, here's a simple version. DXY is a basket of currencies that tracks the strength of the US dollar compared to others, mainly euro, which makes up to 57% of the index. So when the euro strengthens or the US dollar weakens, the DXY goes down. And guess what's happening? Yeah, both. But despite the sell-off, the dollar snapped back a bit. Why? Because most dollars outside the US are loaned into existence. In global trade and finance, demand for US dollar is sticky, even when sentiment is shaky. You can think of the dollar like caffeine. Everyone wants to quit, but most of the world is still addicted to it. Here is where it gets very spicy. Recent job data in the US was ugly. We are talking about negative 33,000 ADP jobs in a single month. That bad news became good news for traders because it raised hopes for a Fed rate cut. The market now expects the Fed to cut rates and fast. That shifts made the DXY nosedive from 101 to below 96 in just days. Historically, the DXY trades in a very tight range between 90 and 110. Breaks below 90 only happen during major crises or recessions. Think COVID panic or global financial meltdown. We are not there yet. I just want to clarify, we are not there yet, but we're getting close to that red zone. Now here is the million-dollar question. Is this the beginning of the end of the dollar? The short answer is no, not yet. Long answer, it's the beginning of the end. As macro experts like George Gaiman makes it clear, the US still has fewer structural issues than Europe and Japan. The Fed, despite the noise, is more likely to stay hawkish than the European Central Bank. So while the dollar may fall further, maybe into the high 80s, it's not going to zero. This is not Weimar Germany. Not yet. Alright, so what does this all mean for you? Well, in every currency shift, there is an opportunity. Here is what I would do for myself. Stay in quality dollar-based assets while the volatility plays out. Add some hedges. Gold, Bitcoin, if you understand the risk. Diversify internationally. Don't have all your eggs in one single currency basket. I would diversify into Dubai or other Asian markets or some European markets as well if they look attractive to you. Avoid junk. This isn't the time to go YOLO in meme coins or meme stocks. This is where you prepare, not panic. Because if the dollar keeps dropping, it will boost the asset prices temporarily. Stocks, crypto, gold. But that boom will come with a hangover later on, and you better not be over leveraged when the Fed reverses again. If you want to really understand how these cycles work, how currencies collapse, and how central banks play this game, join my macro fundamental course, link in the description below. And if you want to talk strategy with other sharp investors, join my WhatsApp community, real conversations, real frameworks, link in the description below. Because this isn't just about FX charts or headlines. This is about your financial future in the shifting world. On that note, hit the like button, subscribe to the channel, and share this video with someone still sleeping on macro shifts. The dollar is in debt, but it's not invincible either. See you in the next one. I just wanted to let you know that I also offer one-on-one consulting calls to the individuals who are looking to discuss their financial planning, their investment strategies, their kids' education planning, their immigration moves, as well as the young professionals, because I have been in the tech industry for almost 20 years. So I also offer one-on-one consulting calls to the young professionals who are looking to have their career development discussion with me, and also personal branding as well. So if you are looking to have some sort of an expert opinion, there is a calendar link in the description below. Book a 30 minutes call with me and I will be more than happy to help you out.